Right. Welcome, everyone. Welcome back to our SPX Daily Plan with Doc. Uh, Welcome, Doc. Nice to have you again. And today we're going to go over some of the charts, some of the levels. So I'll pass it on to you, Doc. Take it away.
Okay, what about your disclaimer?
It's already started. It's
Oh, you
already
already
done.
started. Okay. I gotta do a disclaimer. And I'll also do a disclaimer, whatever I say, it's for educational purposes, blah, blah, blah. Okay. With that said, let's start with where we are and then I'll kind of back it up and move it forward. So yesterday we kind of had volatility went down and we got uh, this push up right to the 60-75 level, pulled back and kind of closed right in the middle of the range. And now here we are today. Let me put on a 15-minute chart. At the same pretty much inflection point we had yesterday, 60-50. And so looking at the roadmap for today, and that's what I like to call it, um, there's always, I like to think of it as there's two pairs, and we'll consider 60-50 the inflection point. Now we have the 60-50 HVL here and the 0 DTE level here. And so the first sort of if then is if we're over or under each of these levels. So let's just start off with the upside because I'm a permeable. If we if we can stay above 60-50, then the path of least resistance or the flow takes us up towards 60-75. It's going to be a little bit of a lift to get there, and I'll show you why in a minute. Over 60-75, we have 60-95, 6100. I'm going to talk about that in a second. And below us, if we should break this 50 45 40 area, the magnet down brings us toward 60-25. However, there's more to the story than meets the eye. And for that, let's just go to simple bar charts. There's somebody that a lot of us have been tracking that we affectionately call the IC whale, or different people have different names for this entity. And okay, the open interest hasn't updated yet on this, but you're just gonna have to take my word for it. 1695, 6100 has around 3,000 contracts, what looks like a call credit spread. Either way, we have a structure right up here. Let me just go back to the chart since this hasn't updated. Let me see if I can get this to update. This is bar chart, so it's delayed and it's not really updating. Do I have the right expiry? Okay, so never mind. Gotta go back to this. I'll just show you on the chart. You can check your open interest on your platforms. 1695, 6100. There's a structure here, roughly equal amounts over here. So that's the eventual stall area as we get toward here. On the bottom, there's another structure, 60-30, 60-25. So that becomes magnet down and then stall and push back up. So in theory, we should stay within this range. In theory, we should stay within this range today. Now, let's look at the downside scenario. If we break this level here, the 60-40, and if IV goes up, if volatility goes up, which with CPI tomorrow and Powell testifying today and tomorrow, it's probably a safe bet that we're going to get some volatility intraday at least, and if Trump tweets or something, some news item. So if volatility goes up, we kind of can easily get sucked down for this level. And then the first thing we look at is, does this 60, 30, 35 area, does this area hold and kind of provide support, or does this area break? If this area breaks, if we break below the 60-25, then we can get attracted toward this area, but also bounce back up toward here. Same thing to the top side. If we can get over 75, we kind of stall up in this area. But if somehow we should break 6100, then we have the magnet up and the pullback down. I'm going to go, let's take a peek at VIX. Let's see where VIX is. Okay, so VIX over under 16 has kind of been the inflection point recently. And once again, if VIX can get over 1625, if it starts going up, then that's going to be suppressive for charts. That's going to increase the delta of the puts that could pull us down. Conversely, if VIX gets below 15, below 16, heading toward 15, then that could be supportive. If we look at the VIX 9-day, though, the 9-day VIX, it's really low. It's 13.7. We also, let's remember that this VIX is 30 days out. So this roughly corresponds to the March expiration. So people are betting, quote unquote, that into options expiration next week, things might be kind of calm, but into March, this is not just a roadmap for today, but into March, things might get a little choppier. I'm going to talk about that in a minute when I go to the other dashboard. Going to switch gears here now and go look at some of the Max 70 kind of names and see what they're looking like. Apple is kind of at a low where we would expect it to possibly bounce. Now, yesterday, most of the Max 7 were green, and now they're kind of getting struck down to their put level. So first inflection point we want to watch is, let's just say for Apple, is can it get over 22.75 and head back up toward the call level, or does it get trapped below the puts? Adobe is an interesting setup to me. I thought I ran the chart, but I didn't. Okay. As you see, we popped up to 40.50. And without the levels over here, I can show you that the next big gamma level is up near 40.70. Maybe we can look at it later on the dashboard. Remind me. We have Applied Materials reporting earnings coming up. I think what happens is I type ABDE instead of ADBE, and then it doesn't run right. We have earnings coming up with Applied Materials, and it's over this call 180 level, but with earnings, it's hard to tell because the IV is elevated. We know that the target was toward this area. Now the earnings are coming up. We don't really have a clear picture of where it might go. 195 is obviously the upside target. And downside target is 175, and below, if that fails, 165. But that's earnings, and earnings vol is exaggerated. AMD is slowly trying to get out from under. Now later, when we look at AMD on the website dashboard, you'll see that it's kind of buried in puts. There's some local calls here at whatever it's 112, 115. But throughout the chain, especially into February, there's just in the money puts. So it's going to be hard for this thing to get moving until those puts get monetized. We have to assume that the holders of the 125 puts don't want to walk away short thousands of shares of AMD in their accounts. So at some point, they'll be monetized. That might give us some relief. I wouldn't really expect very much until after Feb OPEX at the earliest. Let's take a peek at Amazon. Amazon has been kind of is holding on to its levels from between the from after earnings, heading toward resistance. And let's move on to let's look at the QQQ, which is kind of a good default for the for the levels that are going to influence the SPX as well because of their large weight. And as you can see, we bounced right off of 530. And we have the 525. The round numbers tend to be areas that attract interest. And so I would look for a move toward 530 or down toward 525. And if 525 breaks, we have these two areas here to watch as kind of canaries in the coal mine. IWM. Let's take a peek at IWM. IWM has been stuck in this range, 230 when it gets lucky, 224 is 222 when it gets beat up. And this has been a good one to sell strangles or iron condors because it's just been stopping in this range. Really needs to get and stay over 227, 228 and stay over here, get over 230 to be able to kind of get moving from a gamma point of view. TLT. There was some activity a couple weeks ago in TLT 88 and 89 calls when we were down here. This was the IV expected move I mapped out then. This is kind of old news, but you see we kind of reached it and came down. Tesla, excuse me, NVIDIA, we hit 135 yesterday. There's been buyers of the 135 calls. 140 calls is the eventual, the near-term upside target should we be able to break over 135. Now, remember, NVIDIA has earnings coming up the 26th, I think. And so the question is, when do the NVIDIA bulls get emboldened, or do they? It's probably not going out too much over my skis to imagine that we have a pre-earnings run toward 140. this 125, one below 120 area. When we break that put level, we kind of get sucked under and go right back up. Tesla's getting beat up. People are mad at Elon. Tesla's getting beat up. It had that crazy run in from the election through to January, and now it's pulling down. This is a key inflection level, folks. Tesla kind of needs to get over 350, or we might see 3.25. And the way this thing moves, this thing can do this in a few days. Doesn't take much. Other tickers of interest that I'll always like to look at. I like to look at SMH. And SMH, this 250 level has kind of been where the action has been. Can't seem to get over 250 and stay over 250 since we had that gap breakdown. So like since like the this is probably like the deep seek breakdown when Nvidia and the semis got beat up. It can't seem to get out of this range, which suits me just fine because I like selling premium. So I sold non-investment advice, blah blah blah. I sold puts down here. You could sell put credit spreads or however you want to do it. Puts down here in the 225 area and calls up here in the 275 area. You can sell them over. There's a lot of juice in this. I was looking at Marches, looking at April's. I also do broken wing flies and active and manage it very actively. But just looking at this as a bellwether, what we see here is with this chop, we see dispersion within the SMH index. So what that means is um, some of the constituents go up, some of the constituents go down, and there's rotation within the index. So SMCI has earnings coming up. I think it's today or tomorrow. When are the earnings? It looks like they're tomorrow. And SMCI, Super Micro Systems, whatever it stands for. Uh, just to remind some people here, this thing was once $120. And then it got beat up on the short seller accounting news, and they were going to delist it. And then it got some good news, new CFOs, whatever. News doesn't really matter to me. What matters is what price does and what the options market's doing. And there's been call buyers and of earnings. The other day, 35 was the level. There was calls there. We broke through that. The calls went ITM. And now we got calls up at 45. There's call activity at 50. I think there's call sellers up here at 50, 55. I don't know. That's just kind of my hunch. And so that's just an example of dispersion within the index. And dispersion is just a fancy way of saying rotation. Volatility stays the same, but one goes up, one goes down. Micron has been doing the same thing. All these semis have been kind of chopping in their range, which makes for good trading if you like to trade actively, or makes for good premium selling if you like to sell premium above and below these key levels. Let's see if we have any comments or questions. My question is, how many contracts does it take to make a floor or a resistance? Okay. So, and that's a good question. Who does, 1,000 contracts or so start to matter. 2,000, 3,000 contracts really start to matter. Now, that doesn't mean we can't go through it, but that's where the numbers start to count. We've seen the IC whale. We've seen the market go through 7,000 contracts, and so it's always with an asterisk. But they start the more the open interest, the more the contracts begin to matter, and the more you can kind of count on it to trade off of. Why are your SPX levels different than mine? I'm not sure.
Yeah,
Are you using SpreadX, the one that updates for the real time?
yeah. Just send us an email on Discord, and we'll look into it. But it should be the
Okay.
same.
Yeah, it should be the same. The other one I like to look at is IGV, see what's going on in software, and then we'll look at Microsoft. Microsoft, okay, so software, and again, not to look in the rear view mirror, but when we were down here, like in the 102 range, down here a couple weeks ago, late January, there was unusual option activity. I think it was in the 106 calls and 107 and calls up here into March. A few people called it out in the Discord, and that was a good trade if you followed it. Bitcoin. Let's take a look at Bitcoin. Oh, it's updating so slowly, my computer. Bitcoin just hanging in this level, and Bitcoin is another one that I like to sell premium on. 55 is the main inflection point. We seem to be staying in this general range. And Bitcoin, I just like to look at it as a risk on, risk off asset. SBI, I kind of consider sort of similarly in my little mental calculus, a risk on, risk off asset. And it's kind of coming near this 90-ish level, a little bit low, 89, where it tends to get bought up. And so I would probably, the way I would trade it is I would sell puts down here and buy a call broker wing fly up here somewhere and try and get premium for the move down here, and try and get convexity for the move up here, then sell the long call wing on the broker wing butterfly and leave the shorts. But that's kind of just kind of some ideas. XLF premium is actually kind of cheap. And so if one wanted to express a bullish or bearish bias in XLF, especially call premium is cheap. Now with the Trump deregulation narrative, bank earnings were basically all all beating expectations. seems to me, not investment advice, that some kind of bullish expression to try to get a convex move back up here and above out in time toward the next bank earnings. We know that banks tend to run up into bank earnings, might be a good idea. I think I'm going to switch gears. Oh, Joe, you should point out the SPX is opening near the HVL this AM with the ES gap down. Okay. And let me point that out to make it clear to people in case they missed it. Okay, so as we were talking about before, that 60-50 is a key inflection point. And now we're kind of failing near there. And of course, we still have a half hour. But if we open at or near below this area, then the default expectation would be a head down toward this 60-30 area where we have that structure and look to see if we get support near there. And then this HVL area can become a magnet back up again. So the opening few minutes watching the 60-50 area is going to be crucial. Thanks for pointing that out, Joel. Yeah, of course, we know that ES gap down. How much are we down now? 25 points. So roughly 0.3-ish%. The straddle price, I don't remember what it was this morning when I looked at it, but IV seemed pretty cheap considering we have Powell testifying today, Trump with his finger on the Twitter button, and CPI tomorrow. Now let's switch gears. Let me see if this updated by any chance. No, this thing didn't update. It's free, I guess you get what you pay for, huh? Usually they do better than that. Okay, so let's see what we have going on the SPX dashboard. So here's all expirations. You see the kind of inflection point to the upside, and this is kind of where we get the near-term bullish target is up in this zone, and here's your kind of bull bear flip areas. We're right in this kind of consolidation zone or chop zone, as I like to call it, and that's all expiries. I want to take a look at VIX because I think VIX is a interesting setup here. I'm going to talk about VIX. Let's see how we can best visualize what I want to see. Let's start with the open interest. What we've got going on in VIX is there's been a lot of activity in March at the 18 puts and calls. I suspect, don't know, that it's buyers of the 18 calls and maybe sellers of the 18 puts into March and April. 16 puts are likely buyers. Now, could be buyers of the 18 put straddle as well, although people don't usually uh, buy the in the money puts on VIX, but I don't know. But this is an interesting inflection point. And with Trump at the helm, I think we could say that 20 is where, that's the net delta. That's kind of where most people have their bets 20 and over. as a spot for VIX to go when we get tweets or when we get news. This is kind of the void where VIX can kind of drift based on gamma. And 1716, below that, we're kind of, VIX is trapped and kind of has to get over this to really get moving. Now, if we look at, so we have VIXpiration coming up next week, and it's something I want to talk about. Let's see if this is updated. Okay, so let's see what's going on here. We have 17 strike calls, 169,000, 189,000 open interest at 17, 18. So this is kind of your main inflection point. You have this stuff right up 19. So as these calls decay, Charm pushes us down. Charm pushes us down. So over 17, these go in the money, and that's not going to be bueno if we're there before VIX expiration. And if we look what's going on here, 17 strike puts. As long as we're below 17, market makers are short VX futures against this roughly. So we have 16, 17, and we have some stuff even at 15. I don't know what this is, long or short. Not really worried about that so much. I'm worried about the 17, 16, 18 inflection. And broadly speaking, we're below this 17 and a half, 17 area and below these calls into expiration. And then we have SPX expiration 2 days later, the following Friday. So then what happens when VIX unpins? Then we have March. We have 300,000 calls at 20. There's the 18s I was talking about that they keep targeting. There just keeps being action at 18. You see stuff at the 25s. A lot of people, me included, will buy whatever strike, buy one, sell two, or make it into a fly. These 30s up here are probably the other side of flies or ratios, buy one, sell two up here, broadly speaking, or they could just be long, cheapy bets. On the downside, again, we have that 18 area. We have these puts over here, 18, 17, 16. So if we unpin on Wednesday, Thursday, Friday, and if VIX can get meaningfully over 16, 17, we could have that March sell-off that not everybody, that people have been talking about. And so that's just, don't know if it will happen or not. We could easily not have that happen, but that's just sort of probabilistically something to look at. Okay, any other questions? Fabio, you want to point anything out?
No, I think this was great as always. For those who are interested in leveraging the same tool that Doc has been showing you through the dashboard or the levels, you can find us at mentorq.com. For any questions, please let us know, info@mentorq.com. And at the end of the month, we are also going to come up with a very big release of a lot of new tools. So stay tuned. It's going to be on the 27th of February. So follow us. It's going to be on YouTube and X. We're going to be live on the 27th. But yeah, thank you, Doc, for everything.
Thank you. My pleasure.
Have a great day, guys.